Good morning, everyone, and welcome to Bloomberg UK. I'm Francine Lacqua here in London. Now, this morning, we're exploring the future of the UK auto industry under threat from trade rules, higher costs, and fierce international competition. As the sector switches to electric, Britain risks falling behind in the race to build EVs. Now, one of the big stumbling blocks is a requirement under the Brexit deal, which could add tariffs at 10% on cars traded between the UK and the EU. Now, the British government has until the end of the year to negotiate a way round a commitment requiring 45% of components in electric cars to be sourced in either the UK or the EU. That's for manufacturers to retain tariff-free access to the EU market. Now, car makers say the deal threatens the industry, with Stellantis warning that British car plants will close. This is what the Bentley chief executive told Bloomberg.
The good news is we got a free trade agreement with Europe post-Brexit, which involved the automotive industry. So we get mostly the same ability to trade with Europe as we did before, but it's way more complicated and it does cost us more money. Millions per year, not tens of millions per year. But there's always devil in the detail, and one of the details is that starting from next year, and even worse in 2027, there is a rules of origin clause which says a certain percentage of components going into the vehicle has to be sourced in Europe to avoid future tariffs. And at the moment, the amount of supply base in the UK, and particularly batteries, means it's unlikely to be able to hit that threshold. So volume cars going into Europe would have to pay the duty and the taxes, which makes them uncompetitive.
Well, the UK government has told Bloomberg it's working with the EU on car factory rules. Here's the Business and Trade Secretary speaking to us at the Qatar Economic Forum.
The EU, you're right, is our largest trading partner. We have a free trade agreement with them. But the terms in which we wrote rules of origin conditions don't work now with rising prices of components. This is not a UK problem. It is an EU-UK problem. It works both ways. So both sides are actually interested in looking at what we can do in order to resolve that. The trade and continuity agreement is up for review in 2025. We're looking to see what we can do in advance of that because, as you know, there are lots of global headwinds that are affecting the car industry.
So that was just over a week ago, but there have been no breakthroughs, and it's potentially a big problem for the UK. Some 780,000 people are employed in Britain's automotive industry. They produce almost 1 million vehicles a year, and 8 out of 10 cars are made here or then exported. Well, let's discuss all of this with Bloomberg's global car czar. He's Craig Trudell, as well as Michael Dean, a senior European automotive analyst at Bloomberg Intelligence. So thank you both for joining us. First, I mean, this seems like a little bit of a nightmare, right, to deal with and try and puzzle everything together. How serious, Craig, are these post-Brexit rules?
Yeah, I think this is a classic sort of tragic irony of this desire to get out of the EU led to some of the same complications and bureaucracy that was sort of what precipitated a desire to leave the EU, right? So this was a matter of leaving a customs union that made trade simpler and uncomplicated. As we heard from Adrian Hallmark, the CEO of Bentley, they became much more complicated, and it's going to be costly. And there is a sort of question of where do you want to direct your investment? A place that's low cost, less complicated, or higher cost and more complicated? It's a pretty simple question.
Yeah, so how can they change? I mean, I know that, we can spend 2 hours saying why were they agreed in the first place, but if they were agreed, pre-Brexit, is there any wiggle room on how to change things?
I think certainly. You've also got to remember that although we export 50% of UK production to the EU, 65% of UK sales come from the EU. So it's an issue for both sides. So that means there should be a willingness for both sides to come to an agreement.
I mean, how much does this have to do with also costs coming up, that it's almost a perfect storm for everything? Yeah,
that's true. So 40% of a battery electric vehicle is the battery itself. No. So given the increase in metal costs that go into a battery, this has become an issue, particularly as we transition to battery electric vehicles over the next few years.
And costs are not going to go up. Can I just spend a moment in saying the sartorial elegance of our car, experts is, it's a white shirt, it's a very classy white shirt with a very classy blazer for both of our experts. But when you go back to costs, I mean, these are not going to go down anytime soon. Yeah, I think there's also a challenge of energy costs, right? It is a very energy-intensive business, making batteries, and so this is a case where
where you're going to localize battery production is a big question, as Michael referred to. It's a huge part of the value of electric vehicles. And we have a lack of battery production in the UK, and not a whole lot of reason to invest in the UK when energy production is higher, when it's difficult to get to procure labor. There's a lot of complications here, and these are big, heavy components that are hard to transport from mainland Europe to the UK in a sort of cost-effective and easy manner.
But Craig, how much is this because of the automotive industry or batteries or some of the components, and how much of it is actually a struggle overall for any manufacturing in the UK?
Yeah, I think that's a big question. I do think that, in speaking with Adrian Hallmark at Bentley recently, he's talked about this issue of the challenges of immigration, and finding people to work in factories. So I do think that, the UK does have a lot going for it in that it has this long history of manufacturing a lot of cars. And it's a question of whether or not, the sort of retained expertise and experience is enough to make up for some of these other, aspects of the industry that have been the sort of reasons why so many manufacturers have been moving elsewhere.
So how do you revive this, right? I mean, and this is, I guess, what we're trying to figure out. And you write about this every day, as do you. When you look at the blueprint of how you fix this, does it have to start with batteries? Does it have to start with other components? And is it actually inward investment coming into the UK?
Yeah, I think batteries are key. So if you look at UK production, 30% comes from Nissan. They have a gigafactory and they're expanding that. So they have production in place for the transition. GLR accounts for 30% of UK production. So if press speculation is correct, the next gigafactory from JLR will come to the UK. So that would be a massive positive for the UK and would accommodate 60% of their battery needs in the future.
Yeah, but Michael, so JLR is owned by Tata. They're looking at doing an agreement with the UK. How much of a struggle is it if it doesn't come through?
Yes, a massive struggle if it doesn't come through, because they do need these batteries.
Yeah.
And because of these rules of origin, it's going to be an issue, and they will become uncompetitive if they're going to sell to Europe in the future.
But again, and I know this is a difficult question, but to you both, do they need this deal for batteries and automotive, or do they just need it so that it says, look, Britain is open for business?
A bit of both. So, subsidies are key. So there's been huge headlines about the Inflation Reduction Act in the US attracting battery plants over there from EU companies. So subsidies are key, and the UK government has to back UK businesses in terms of battery production, and that should be the case with Jaguar and Land Rover. Okay,
is it looking good? I mean, the government, again, we have a government that's a little bit in a tricky situation because they have to fight a lot of fires, and we're not sure they're in charge for much longer.
I think what we absolutely need, just to follow up on what Michael's talking about, is an industrial policy, and that's something that we've consistently heard from car maker executives and current and former, that the UK lacks an industrial policy to justify keeping production here. Especially in light of the Inflation Reduction Act, that really sort of raised the stakes and is going to force the hand of the government to really step up and support and save this industry.
At the same time, I guess, the industry that was really in doldrums during COVID has not only recovered, but luxury sales of cars are doing really well.
Yeah, and I do think that there is absolutely a place for companies like Aston Martin and Bentley to maintain production in the UK, even if it means even if we are unable to attract much battery investment. We've heard Bentley talk about, being able to tap Volkswagen's supply chain, using batteries from mainland Europe that would apply to that rules of origin and help hit that threshold, and not necessarily need to localize battery production here and still maintain their presence in Crewe as well. I mean,
it's amazing, actually. It does employ 780,000 people in the UK, this industry. It's a lot of people. And if you look at, of course, the targets that the UK has set, Michael, the UK wants basically to be hybrid by 2030 and then completely electric by 2035. I mean, that's a huge amount of cars that need to be made and then driven.
Yeah, it's going to be very difficult. You've already seen the EU dialing back, or some EU countries dialing back on when they're going to ban the combustion engine. In terms of BEV market share, it's about 15% in the UK. That compares to the 13% in Europe. So we're still a long way away from this being an issue, certainly not in the next few years. But certainly in the second part of this decade, we need better battery supply, but we also need better charging infrastructure. So that could be another part of the puzzle that's holding the transition back.
I mean, that seems hard, right? Because I don't know how long it takes. First of all, you need the copper and the things to make it. And again, we don't have an industrial policy, and the Chinese have really thought about this, maybe more than G7 countries. But two, how long does it also take to put these charging stations in place?
Yeah, it takes a long time because you need the people in place, you need the finance in place, you need planning permission. They're very expensive. So globally, there's 2.7 million public chargers in place, only 600,000 in Europe. We think you need 2.5 million by the end of the decade if we're to meet government targets. So they've got a long way to go, and we're probably putting in about 150,000 chargers at the moment. So that needs to double if we're going to meet these targets by the end of the decade.
So industrial plan now is basically the call for action for the government, right?
Yes.
We just need an industrial plan.
Yes, and it's long overdue. I do think that some of the warnings that we've heard recently, maybe one sort of silver lining of this, talk about, doom and gloom will sort of wake up leaders to this idea that, they can't continue to allow this industry to languish, and do need to come up with an answer to what the IRA, what's happening with the IRA, and in the EU to answer the IRA in places like France and the rest of Europe.
Such an important conversation. Thank you both for joining us. Bloomberg's global Kartsar, I love saying that, Craig Trudell and Michael Dean from Bloomberg Intelligence. Now, speaking of an industrial plan, we're also getting UK manufacturing PMI coming in a little bit better than expected at 47.1. Remember, anything below 50 is still in contraction territory, and UK firms are expected to raise prices some 5% in coming year. That's the very latest forecast from the Bank of England. Coming up, batteries and Brexit. We'll talk more about the state of Britain's electric vehicle industry and why the UK is being overtaken by others. This is Bloomberg. Economics, finance, politics. This is Bloomberg UK. I'm Francine Lacqua here in London. Welcome back to our deep dive on the future of the UK car industry, of course, in particular, electric vehicles. Now, joining us now is Caspar Rawls, Chief Data Officer at Benchmark Mineral Intelligence. We love a data guy because this is what we do at Bloomberg. So you track and measure and actually see where the soft spots or the blind spots of the UK government are. How are we doing on electrifying some of the batteries and the car industry?
Yeah, good morning. Thank you. Yeah, in terms of the UK government, we're not doing too well. We've really lacked proper, let's say, electric vehicle or lithium-ion battery policy so far. And when we look at other countries in particular, not just in Europe, so in Europe, Germany, Hungary have been doing very well at attracting investments in the lithium-ion battery supply chain, but other global regions as well, particularly Asia and China.
But so is it too late? And is it actually a lack of capital? So it's a lack of big investors? We know that Bill Gates, for example, is giving a lot of money in the West Coast to try and get this done. Or is it a government policy?
It's probably not too late, but to catch up, you need to put more money on the table. So the UK needs to, or the UK government needs to show support for a full lithium-ion battery supply chain. I mean, to date, so far within Europe, a lot of the focus has been what we'd term the downstream, so kind of the battery in the electric vehicle. But also we need to think more about the upstream, the critical minerals. So where are you going to get those minerals from? Can you do that in the UK? Probably we won't be self-sufficient. So thinking about partnerships with other regions to get the minerals to feed the supply chain and all of those plants.
So, Caspar, is it the model of, for example, Germany? Do you have to grow this in-house? So do you have to have, UK technology? And we know that we have top universities, so we could be able to do this if you put enough capital behind it. Or is it about the UK government attracting, for example, Elon Musk to have a factory in the UK?
It's a mixture of both. You definitely want to attract what we would term at Benchmark the tier one cell manufacturers. So there's actually only kind of 9 companies globally which can supply electric batteries into every global region, electric vehicle batteries into every global region. So you need to kind of bank on those companies, the ones with the experience and the technology to supply EVs. It's very challenging to get to that quality, but also homegrown talent as well. So supporting industry, supporting new UK companies which are looking to develop battery technology.
What I also don't understand is some of the earths or some of the metals needed. It's copper, it's certain parts of like iron, I think, I mean, things that actually British listed companies do, right? Glencore is very present in the space. You have BHP.
Yeah.
Is that a missed opportunity in actually trying to do some of these deals, or does it not make a difference where they're listed?
It probably doesn't make a difference where they're listed, just because these critical minerals are going to be in such short supply. So primarily that's lithium, and that comes from various different global regions, and therefore you get many different types of companies.
Mainly China, right? I mean, they locked and loaded that.
Yeah, so lithium chemicals, a lot of lithium chemicals come from China, but that's the refined type of lithium. A lot of kind of the lithium in the ground, let's call it, comes from Australia and South America. But also you need other minerals. You need nickel, you need cobalt, manganese, you need iron phosphate for LFP batteries. So it's very important to ensure that you can either support industry to go out and acquire those minerals, or, the main way would be to attract companies who buy them and ensure that they're going into the plants in your region.
So, Casper, if you're the UK government now, and of course you're dealing with the Inflation Reduction Act in the US, where we're also seeing possible a lot of investment into greening the automobile sector going stateside, and you have, of course, the plan of Ursula von der Leyen in Europe, do you need to be better and bolder to make sure that investment comes here? Yeah,
you need to compete at that level, and the amount of money that's been put on the table for the Inflation Reduction Act in particular by the US government is a scale that we've not seen before. It's many hundreds of billions, potentially trillions of dollars that will be in terms of support for a full lithium-ion battery supply chain from the mining, the critical minerals, through to recycling. So it does up the ante as as the UK government looks at this, but as I say, it's probably not too late. But something needs to happen, in the very near future to ensure that it isn't too late and we don't lose those existing jobs which are tied to the auto sector in the UK.
Are we still in the infancy of batteries? Is it what, like, solar panels were 15 years ago?
Yeah, I mean, definitely in terms of the scale, we're in the kind of Ford Model T era of the lithium-ion battery supply chain, so at the very bottom of the hockey stick curve. So, yeah, there's still time. The demand for these batteries is going to be growing something like 25% CAGR beyond the end of the decade. And so there's a lot of scope to build out the supply chain in that time frame, but it becomes more and more challenging as time goes on. And those kind of very sticky strategic relationships between the car makers and the battery makers get cemented over time.
But it's also the technology, right? How much is the technology changing? I know that and how you recycle them, like the whole ecosystem, how much of a question mark does it still have?
Yeah, I mean, definitely the technology is changing all the time. So the lithium-ion we have today is better than the lithium-ion we had
5 years ago, I guess.
Yeah, or even 2 years ago. It changes very quickly. But, that it's changing with consumer needs. So there's still a lot of scope to see the supply chain change, the technology change that we use in the vehicles, and then next-gen technology as well. So you always need to have one eye on the future of the kind of next type of batteries that will be going into EVs and storage as well. And
Casper, when you look at the data, consumers want this, right? Like, consumers, are ready to buy the cars as long as they have the infrastructure.
Yeah, I mean, the infrastructure is important. Obviously, there's range anxiety, so having access to charging. But also, what's challenging is we've seen prices for critical minerals. At the peak last year, lithium prices were 10x where they were just before the pandemic. So it's also managing costs. So being able to build out that scale to keep costs low, to enable more consumers to be able to afford electric vehicles. At the moment, they're still relatively expensive.
Casper, thank you so much. Casper Rolls, their Chief Data Officer at Benchmark Mineral Intelligence. Now, coming up, Made in Europe, we'll ask what the EU is just doing differently to the UK to get ahead in the EV battle. That's next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg UK. I'm Francine Lacqua here in London. Now, this morning we've been exploring the state of the UK car industry, threatened by Brexit, trade rules, and at risk of falling behind in the switch to electric. Now, while the UK has only had a handful of battery plants, Europe has at least 35 up and running or under construction. Well, let's bring Bloomberg's Elizabeth Berman from Munich. Elizabeth, good morning. Why does Europe seem to be so ahead of the UK when it comes to batteries?
Yeah, it's a bit of a relative question. If you look at the UK, they've been distracted since 2016 with Brexit. There's been a high-octane political drama, successive business secretaries, successive transport ministers. So there's not really been much of a line on developing an industrial policy. And when you compare that to Europe, you have to look back to around 2018, when the race and this realization to try and close this huge gap in the value chain in EVs. That really started to take shape then when France and Germany formed an alliance. And the whole thing became an election issue even in Germany, like this push to build lots of battery plants. And then it reached the EU level and things started to take shape. And today we're really seeing the first fruits of these in the shape of actual plants that are producing, that are up and running. And just this week in northern France, Stellantis, Mercedes and Total inaugurated the first stage of their plant there. And then we also have in Sweden Northvolt, which is up and running. But this makes it looks good versus the UK. Versus elsewhere, Asia, there's still a lot of catch-up to be done.
But a final thought then, Elizabeth, maybe on the post-Brexit trade rules. The Stellantis chief executive has called them a lose-lose situation with both the UK and the EU. Why can't the two sides work out a solution?
Well, first of all, Stellantis is right. The European supply chain is not ready to meet these rules of origin. It's also to do with rising raw materials prices that are making batteries even more expensive. And in terms of trying to find a deal, as we've heard, the car industry is very much united in pushing out the threshold level to a later date. From the UK, we've heard the same. Where we've had notable silence so far is from the EU Commission. I can't speculate on their readiness to reopen the deal on this, but there are, of course, also a lot of smaller states in the EU that might want to benefit from multi-billion investments, notably Hungary or Slovakia, where you already have lots of car plants.
Elizabeth, thanks so much. Bloomberg's Elizabeth Berman there on the EU side. Now, be sure to subscribe to Bloomberg's In the City podcast, also that I host alongside Dave Merritt on Apple Podcasts, Spotify, or wherever you get your podcasts. Every Thursday, new episodes.